Institutions are buying Marathon Digital Holdings hand over fist last quarter. So just this week, we got 13 F updates, which basically is just the day that large institutions have to disclose their positions. So we got updates on who exactly owns Marathon Digital, and the numbers are pretty astounding. So we saw that Vanguard actually increased their holdings by 58%, and the company is now the top shareholder, owning 17.5 million shares. And then we also saw Citadel nearly double its holdings, actually over double their holdings to 5.4 million shares. And then once again, State Street, what do? They roughly doubled their holdings. Actually, no, they increased their holdings by 57% and now have shares of 5.1 million shares. So that's a massive holding, right? Goldman Sachs, what do? Well, now they actually hold 3 million shares, and they increased their positions by 218%. So these are the largest asset managers in the world allocating capital to Marathon Digital Holdings. And then we also see Morgan Stanley. What do? They increased their position by 100%, and now they own 2.2 million shares. So this is all really great news for the company, right? The largest asset managers in the world are becoming more and more bullish on Marathon Digital. And then we see even Charles Schwab here has 1.3 million shares, and they increased that position by 43% in the last quarter. So really every notable large asset manager is buying the stock. Bank of America, what do? They increased their position by 281%, and now they own almost 1 million shares. So, I mean, you could just keep going. The large asset managers really, really stand out here. So this is awesome to see. And you can see here, Bank of New York Mellon increased their position by 29%. JP Morgan did sell about 8% of their position. Not a huge holder. They only hold about 500,000 shares. So when you add it all up, institutions are becoming more and more bullish on the stock, which is obviously a good thing for shareholders. And then BlackRock didn't change their position at all. So this is really awesome to see, and it gives the average investor more confidence that these large investment managers that are paid tens of millions of dollars to allocate capital are allocating capital pretty quickly and hastily towards Marathon Digital, which is awesome to see. So with that being said, let's take a look at the financials for the company quick and see how they compare to the sector median and the company's own history. So in terms of valuation, not much to go off of here. Obviously, the company doesn't make any money at this point in time. We have a price to book ratio of 4.08, which basically tells me that the market cap is 4.8 times the book value of the company, which is above the sector median, which I don't love to see, but it's actually below Mara's 5-year average. So on a historical basis, price to book does look somewhat cheap. And then when we take a look at the growth numbers here, we can see that revenue growth year over year was minus 11%, which is obviously not great when you compare it to the sector median of 9%, and you compare it to Mara's 5-year average of about 700% revenue growth year over year. But it is good to see that it's going to improve to 54% over the next 12 months for Mara, which obviously is still below the 5-year average, but it's good to see that growth is at least trending in the right direction at this point in time. And then I'll also take a look at the profitability metrics for the company. So we can see here that gross profit margin is at 24%. And for those that don't know, that basically just tells you what the company makes for what it sells. So it's simply just revenue minus cost of goods sold. So 24% is a pretty decent number, although it is below the sector median. And then we do have a net income margin, which is pretty poor at negative 277%, obviously below the sector median of 2%. And then cash per share is about 65 cents, which is roughly about less than 5% of the market cap in cash. But with that being said, let's take a look at these other pure play crypto names. So I'm going to be comparing the stock to Riot, Coinbase, Generidge Holdings, Hut 8, and Canacan. Probably pronouncing their last one wrong. Chinese firm on the end. But so let's start off with the balance sheet for the company. So in terms of cash, the company has $113 million in cash on hand, which pales in comparison to its debt load of $734 million. So this means that the company has $621 million more debt than they do cash, which I don't love to see. And when we take a look at how this compares to a peer like Riot, Riot has almost $300 million in cash and only $22 million in debt. So Riot has significantly more cash than they do debt. And Mara's the reverse of that, which I don't love to see. And given Mara is kind of, burning money, if you will, their net operating cash flow for the past 12 months was minus $300 million. So the company's going to have to figure something out. They're going to have to either issue new debt, issue shares possibly, but they're going to have to find a way to kind of fund future operations here. And then let's take a look at the profitability metrics compared to peers. So Mara does have a profitability score that is above Riot and above all the other pure play miners. Obviously below Coin, but Coinbase is a little bit different business, obviously, an exchange. So Mara's profitability metrics honestly look pretty solid when you compare them to Riot and others. And then growth numbers, let's take a look at the 5-year compounded annual growth rate. The 5-year compounded annual growth rate for Mara is actually better than all peers, which we love to see. So growth metrics are the standout. Mara is the standout amongst the peers. And then in terms of valuation, we can see that here that in fiscal year 3, we're projected to have a negative 11 times PE, which is better than Coin and actually better than Hut and right in line with Can and obviously Riot's, kind of there as well. So Riot and Can better than Mara, but we're basically in line with Hut and Coin, which I do like to see. And then on a price to book ratio basis, we are expensive relative to peers. So if I had to add it all up quickly, valuation is more expensive than peers. Growth metrics are very good amongst peers and kind of the standout. And then profitability metrics are basically in line with peers, although this net income margin number ranks out pretty poorly. So we definitely see growth rationalizing the higher valuation investors are willing to pay for Mara. So with that being said, let's take a look at the company's chart and see if we can't give a logical price prediction. So shares are coming down to test this $13 support level, which is where shares had topped out in April of 2023. I believe this level will once again hold once we come down to test it. And then obviously shares have been on a pretty steep decline since the July highs of about $19. So in this decline, we've seen shares kind of we've seen volume slump off. And typically when you see volume slumping off and prices dropping, it signals a reversal of trend. So hopefully this volume trend kind of signaling a reversal will lead to a move higher for Mara over the coming days and weeks. So volumes have slumped as price has slumped, which implies a trend reversal for the stock. So that is obviously a good sign for shares. And then in terms of a price prediction, I think we likely come down to test support about $13, and then we head to about $15.50 over the coming days to weeks, as this is a major level of resistance as we use this level as support back in early August. We also use this level as resistance back in October of 2022 and September of 2022. So I think we could come up to this resistance level, reject, and move lower over the coming weeks. With that being said, though, let's take a look at some of the seasonality trends for the stock. So I can report with a smile on my face that August, on average, shares do increase 1.9%. This just shows me the average return by each month. So August is definitely a bullish month when you take a look at the seasonality trends, which I do love to see for the stock. And this pulls about 10 years of pricing data, which is definitely nothing to sneeze at. So I would say that this is pretty significant and does signal a stronger likelihood for a move higher for the stock. So we have that August seasonality trend reading bullish. We're coming down to support at about $13. The stock has great growth metrics, although we're a bit over, we're trading at a premium relative to the market, especially those crypto peers, but it's really because of those growth metrics. So long term, this company does seem like a great opportunity. Obviously, Vanguard, State Street, and other large institutions sure think so. So I do think this is a good stock to own if you're interested in the crypto sector, which I am. So I do believe we hold this $13 level, move higher, and I think MAR is a pretty good long-term hold within the crypto sector. So with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone, happy trading, happy investing.